In the Black Out Loud.
Do Australia's sophisticated investor rules need a rethink? Australian income and assets test thresholds have been in place for sophisticated and wholesale investors for almost 25 years, but an inquiry finds significant change is unlikely for now. By Gary Anders. This article has been edited for audio purposes. Article begins. The Australian Parliamentary Joint Committee on Corporations and Financial Services recently made two recommendations following an almost year-long inquiry into whether the current rules that determine who can be classed as sophisticated and wholesale investors remain relevant. Yet, after extensive hearings and receiving almost 130 submissions, the list of recommendations contained in the committee's final report relating to the existing wholesale investor and wholesale client tests effectively add up to no changes for the foreseeable future. Recommendation 1 is that the government consider establishing a mechanism for periodic review of the operation of the wholesale investor and client tests, and that any such mechanism include mandatory requirements for engagement and consultation with Australia's investment industry. Recommendation 2 is that, subject to a period of stakeholder consultation, the government amend the Corporations Act 2001 to remove the subjective elements of the sophisticated investor self-test and introduce objective criteria relating to the knowledge and experience of the investor. Richard Webb, CPA Australia's superannuation lead, policy and advocacy, says the parliamentary review has kicked the can down the road for the time being. He says, "We are quite downhearted about the fact that what we thought were some fairly reasonable updates to the tests haven't been recommended by the committee. But at the same time, I think we knew it wasn't going to come out with anything earth-shattering anyway." What are the current rules? The current sophisticated and wholesale investor tests, covering individual wealth levels and investment values, were introduced by the Financial Services Reform Act 2001. Amendments incorporated in the Corporations Act. They prescribe that individuals can ask an accountant to certify them as a sophisticated investor if they can prove they earned at least 250,000 Australian dollars in pre-tax income in each of the 2 previous financial years, or that they have net assets of 2.5 million Australian dollars, which can potentially include the family home. An individual can also be classified as a wholesale investor if they make an investment of 500,000 Australian dollars or above. Certified sophisticated and wholesale investors can gain access to investment products that are not available to general retail investors. But by being certified as such, they may also lose access to many of the consumer protections that are readily available to retail investors under the Corporations Act. When the sophisticated and wholesale test levels were first set almost 25 years ago, only 1.4% of Australian households, that's 104,000, met the minimum criteria for income or net assets. Very few were able to access the capital needed to make wholesale investments. However, the substantial growth in average wages and asset prices since 2001, especially in property prices, but also in share market holdings, means millions of Australian households are now eligible to be certified as sophisticated investors. Research by Australian National University projects that almost 20% of Australians currently qualify, and more than 40% of Australians are likely to qualify under the current threshold rules by 2041. That's 11.5 million individuals. Richard Webb says, "It's crazy that there haven't been any changes after nearly a quarter of a century." He adds, "It's somewhat terrifying that if something's not done, you're going to have people with very small amounts to invest being put into some probably riskier investments compared to what they would have had access to many years ago, just given the effects of inflation." The risks of being sophisticated. Being classified as a sophisticated investor can open new investment opportunities, but it may also expose those investors to greater risks, as wholesale investment product issuers aren't under any obligation to provide them with a regulated disclosure document. Similarly, There is also no legal requirement for sophisticated investors to be provided with a prospectus, a target market determination document, or, where the investor has received personal financial advice, a formal statement of advice. According to the Australian Securities and Investments Commission, or ASIC, certified sophisticated investors are more likely to be able to evaluate offers of securities and some financial product, such as interests in managed investment schemes, without needing the protections of a regulated disclosure document. They're also considered to be sufficiently skilled to understand the value of investment products or services and the risks associated with investing. But there are many examples of investors having been classified as sophisticated, losing large sums of money because were not fully aware of the investments they were buying into. Recourse to the Australian Financial Complaints Authority is provided on a discretionary basis to sophisticated and wholesale investors, and varies depending on the specific circumstances. Calls to raise the bar. In a joint submission to the Parliamentary Inquiry, CPA Australia, along with Chartered Accountants Australia and New Zealand, the Institute of Public Accountants and the SMSF Association recommended amendments to the current sophisticated and wholesale investor-client rules, particularly regarding the thresholds for each of the tests. Likewise, ASIC recommended increasing the test thresholds to account for inflation since their introduction to the Corporations Act. Based on consumer price index data, ASIC recommended lifting the product value test to 922,000 Australian dollars, the individual wealth test to 4.61 million Australian dollars, and income test to 461,000 Australian dollars. Chair of the Parliamentary Committee, Labor Senator Deborah O'Neill, notes that there was significant stakeholder interest in reform of the Sophisticated Investor Test, or SIT for short, on the basis this could provide an alternative to the wholesale investor and client tests based on product value, individual income, and assets thresholds. O'Neill says, the committee therefore considers that the Corporations Act should be amended to introduce objective criteria to the SIT. This will ensure that potential wholesale investors are not unfairly or arbitrarily excluded from wholesale markets, and thereby promote participation in and the flow of capital to Australia's wholesale markets. Dovetailing into this is the Parliamentary Committee's second recommendation that the government amend the Corporations Act to remove the subjective elements of the sophisticated investor test and introduce objective criteria that covers knowledge and experience. O'Neill says, the proposals included suggestions concerning the current requirements for accountants' certificates for wholesale investors and clients. The committee did not reach any conclusive view or recommendations on these matters. However, the committee acknowledges that the issues identified raise significant policy considerations for government. Overseas experiences. The Parliamentary Inquiry heard concerns from some investment industry participants that increasing the test thresholds could have unintended consequences based on overseas experiences. In 2023, to account for inflation, the United Kingdom adjusted a number of the thresholds for its wholesale investor and client tests by increasing the thresholds for its income high net worth test from £100,000 to £170,000 and assets test from £250,000 to £430,000, respectively. However, due to the negative impact of the increases on the investment funding of startup companies and early-stage venture capital funds, the UK government reversed the changes only 3 months after implementation. Alternative Investment Management Association Regulatory Committee member Paula McCabe says, Australia is not currently out of step with international markets regarding our wholesale tests. While there is some divergence in terms of the numbers used to meet income tests or the assets test, almost all comparable jurisdictions do use one such test or more. However, Deborah O'Neill points out that the subjective character of the SIT increases the potential for conflicts of interest, given it would generally be in the interests of product issuer for an investor to be classed as sophisticated so they can be sold wholesale investment products and services. Richard Webb says, at the end of the day, CPA Australia's position is unchanged. We'd like to see, wherever possible, the same kinds of protections for retail investors extended to wholesale investors. The amount of money that you have to invest shouldn't really preclude you from getting access to decent consumer protections.
In the Black Out Loud.